Ladies and gentlemen, welcome to the Q2FY25 results conference call of Gulf Oil Lubricants India Limited, hosted by Emkay Global Financial Services. As a reminder, all participants' lines will be in the listen-only mode, and there will be an opportunity for you to ask questions at the end of today's presentation. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touchtone phone. Please note that this conference is being recorded. I would now like to hand the conference over to Mr. Harsh Maru from Emkay Global Financial Services. Thank you, and over to you, sir.
Thank you. So on behalf of Emkay Global Financial Services, we welcome you all to the 2QFY25 earnings conference call of Gulf Oil Lubricants India Limited. From the management side, we have Mr. Ravi Chawla, Managing Director and CEO, and Mr. Manish Kumar Gangwal, CFO. So I would now hand the conference over to the management for their opening remarks, followed by the Q&A session. Thank you.
Thank you. Morning, afternoon, good evening, everyone. Welcome to the Q2 call for Gulf Oil Lubricants India Limited. Let me start on a festive note. I think we all have seen Diwali festival and the New Year coming in. So I'd like to wish everybody a very, very happy festive season and a New Year going in to the future Q3. And thank you for joining our call. Very happy to share that Q2 for us, which is normally quarter which has heavy rains and other things, has been a strong quarter for us in terms of volume growth. So happy to share that 9% volume growth continues our trajectory of being 2 to 3x the market. And this has really happened as we have looked at many demand pockets for us. While we also see the market growing by 3 to 4%, we have seen that this quarter there was some lingering effect of the elections and certain liquidity challenges. But given our strategies, we have posted strong volume numbers. And of course, we'll cover the figures in detail. But we've also seen a lot of our segments growing, and we've notched up volume growth of 8.8%. If you take out the factory fill, which is the new vehicles, mainly commercial vehicles where we are also involved, our growth is actually double digit in this quarter. A lot of good growth has happened in terms of double digit growth in the motorcycle category, in the agri channel retail segments. We also continued our growth in the B2B segment, which has been growing double digit and high double digit in Q2. In the channel particularly, we have seen that the channel OEM business, that did very well. Again, the agri segment is a highlight there. We have seen that a lot of our sales and marketing initiatives undertaken during the quarter that were really working for us. And very happy to share with you that we had launched in this quarter, towards the end, one of Gulf's biggest ever campaigns, a 360-degree campaign. We called it the Unstoppable, which had not only used a lot of media vehicles, it featured the 3 brand ambassadors we have, the iconic Mahendra Singh Dhoni and the cricket superstars Hardik Pandya and Smriti Mandhana for the first time in an advertisement, which not only showcased the brand values of Gulf, which is together we are unstoppable, the Hindi line being Har Kadam Pe Rok, but also spoke about our products and of course created that connection and the engagement with our target audiences. This was 360 degrees, and definitely this investment is paying off. We also saw some positive confidence in the trade, and we also are continuing this. Other highlights of this quarter have been the exports, which have also grown for us and was also a good contributor. We continue to focus on our premium range of products, and this again happy to share that this has contributed to the overall kitty by notching up double the growth rate, though it is a small contribution in terms of percentage, but this is growing at double the rate which we are growing, which augurs well for our strategy of profitable growth. Our distribution also has grown, particularly in the rural segment with our bike stops and car stops, and therefore increasing our penetration level. So I think all in all a very good quarter. There has been a slight decline in AdBlue this quarter, which I think would be a seasonal impact due to overall consumption slowness and a bit of demand, as we have seen. But I think overall we are growing in the year, well double digit in that also. And I would say that a lot of our strategies which we have put in place are commitment to really outperform the market amid a lot of challenging conditions. really it has given us the results, and it positions us well again to continue this growth. And again, I would like to say that the outlook for us and the growth momentum that is there, it is also responding well to our strategic and our tactical measures which we are taking, and some of these have been industry leading. So I think that's been Q2, again a strong quarter for us, and we hope to continue this. Over to Manish to cover a few of the other highlights. Manish.
Thank you, Ravi. Good afternoon, everyone. So as Ravi highlighted, it has been another good quarter for us from overall volume perspective, and at the same time we have been able to deliver good increase in the gross margin by nearly 100 basis points. Also, our EBITDA has been in the guided range of 12 to 14%, coming at 12.6% for the quarter. After investments, as Ravi was highlighting, there is an higher A&P during the quarter because of the mega campaign, the Unstoppables, and more investments into human resources and building the company for the future. But in spite of that, the EBITDA is continuing to be in our guided range. Overall, the profit growth, PAT growth is 15% for the quarter, and for H1 it is 22%, so quite a strong performance at the PAT level as well. On cash flow side, we have been able to continue to generate good cash, and you can see from the cash flow published that 147 crore of cash generated during H1, which is more than even the last year H1 of 140 crores. So overall, good control on the working capital, and there is some increase in the inventories because of some shutdowns coming for big refineries globally, but overall still we have been able to do very good at the working capital and generated a good cash flow for H1. So with that overview, we would like to go for Q&A. Over to operator.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participant, you may press star and 1 to ask a question. The first question is from the line of Probal Sen from ICICI Securities Limited. Please go ahead.
Yeah, thank you. Good afternoon, sir. A couple of questions. First one, the basic one, if we can get the number of the volumes for the quarter.
Yeah, good afternoon, Mr. Prabal. So core lubricant volume has been 37,000 KL, and AdBlue volume has been 29,000 KL.
Okay. So AdBlue, I think Ravi sir did mention that it was a tad weak in this quarter. How should we therefore look at the H2 in terms of growth in both these numbers? Just as a trend, how should we actually sort of look at the second half?
You see, we have grown AdBlue over the last 2 years significantly, nearly 600%, 6 times from FY22 base. So there has been a very rapid growth in that segment for us and for the industry as well.
Right.
And obviously, at these elevated higher levels, we are seeing that there is a stability coming to in terms of overall numbers. However, this was a seasonally impacted quarter, as we highlighted already, that during monsoon season, obviously the movement of trucks and CVs, which is the large consumption segment, is relatively lower, and we are also monitoring, but on YTD basis we are still double-digit growth, and we hope that at least we are seeing a clear trajectory that at least 10,000 KL per month is the minimum stability which has seen in the segment. How it grows from here on will really depend on how BS6 grows. Also, I think some of the segments are being added to for AdBlue consumption, like construction equipment, etc., from 1st of April, and that should also augur well for the segment overall going forward.
Okay. Okay. The second question was, sir, with respect to the A&P cost increase that was mentioned about the Unstoppables campaign. So would it be fair to say that, and you also mentioned that there was some increase in the staff costs as well. So is it fair to say that only a certain portion of this is going to be there for the rest of the year, and some part of margin improvement can come through once this campaign costs are done and over with?
So usually we calibrate our A&P expenses from quarter to quarter basis. The quarter one was slightly higher because of IPL season. Quarter two, we have done this mega campaign, which is the biggest single campaign we have ever done in the history of Gulf. So obviously there is some impact of those, but overall we try to calibrate our marketing and on the ground activities in line with. Yes, but this was still a slightly elevated quarter to the extent of 40-50 basis point.
Right, which is what I'm saying, sir. Just wanted to get a sense that we have been obviously seeing a steadily increasing trend in terms of not just gross margins but even EBITDA margins as well for the past several quarters. So this quarter, obviously, as you mentioned, is a bit of an aberration because these costs were higher. So can we expect a return to that trajectory? Sorry.
See, our A&P investments are based on our objectives in terms of consumers, how we want to convert, what are the various brands we have, and then there is a share of voice where you have competition also getting that share. And today it's a bit different because you have many media platforms, you have digital, you have so we do calibrate our A&P based on that. As of now, we did do this mega campaign in quarter two, in which we had to put in a slightly more investment. So we'll have to wait and watch that is. But yes, we are not going to have these mega campaigns. It's a huge campaign which still is going on. So, this is obviously an investment we make in our brand. So we'll have to wait and watch in terms of share of voice. But yeah, we do see that this campaign is also having a good impact on our sales.
Is it fair to therefore say that some overflow of these costs will be there in Q3 before maybe Q4 sort of is a more normalized OPEX environment?
It's a continuous process. So I would say that yes, it is going to have, there is some spillover in quarter three.
Understood. Last question, if I may, sir. With respect to revenue from the battery segment, is it possible to share the number for this quarter?
The battery turnover was 20 crore rupees for the quarter.
20 crore. Okay. And sir, overall, I think it was mentioned that Tyrex has grown its revenue quite substantially in percentage terms. Is it possible to share the absolute number as well right now?
Yeah, so Tyrex, is a DC charger manufacturer where we hold 51%. We invested in this EV company, and they are really doing very well in terms of, getting into the segment and growing their revenues, and in terms of customer acquisition. And in terms of top line, yes, we consolidated their top line. So for quarter two, it was around 14 crore rupees. And for the H1, it is around 24-25 crore, which is the last year full year turnover was around 24-25 crore for Tyrex. So they have achieved the last year number in H1 itself. And we have been also guiding in the past that we want to at least double the turnover every year for the next few years coming. So obviously we are on course to that. And if we compare H1 to H1, they have grown their turnover by nearly 3 times. So last year H1 to this year H1, they have grown their turnover by nearly 3 times. Although on a small base, these are numbers which are still relatively quite small compared to our overall volumes, overall revenue. But yes, we are seeing very good traction there in that business.
Understood, sir. That's very, very useful. Thank you very much. I'll come back in the queue.
Thank you.
Thanks.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Sabri Hazarika from Emkay Global Financial Services Limited. Please go ahead.
Yeah, so I just wanted some idea on the overall base oil pricing trend. So in terms of your cost of raw material on a dollar per metric ton basis, rough cut, I mean some sort of like ballpark rate. What was it in Q1 and what was it in Q2? And right now, what kind of rate you are seeing?
So thanks, Sabri. I think as you all know, the base oil rates are linked to the crude movement, which is a volatile commodity. We saw an elevated crude oil in April, May during this year, and there is a lag effect in the base oil to the extent of 1 to 2 months, and sometimes different grades of base oil also plays different role. As I was mentioning, some of the big refineries of base oil globally are going for shutdown during October, November. So there are a lot of, I would say, interventions which are there in the base oil prices coming from different quarters. And so time to time we have seen elevations in the base oil movement and crude linked to the crude movement. But on a ballpark, I can give you that if crude remains at the current level, which is $75 to $80 range. Of course, it sometimes goes to $85 also during the quarters. April it went up to $90. July it went up to $85. So it's a volatile thing. Very difficult to comment. But if it remains at the current levels, we are comfortable to maintain our gross margins.
So is there a possibility of like increasing your margin guidance from 12 to 14%, or I mean more so in terms of say EBITDA per liter, for example, based on the numbers you have given, I think it is like close to 16 rupees per liter was your EBITDA. So if we and this is like on a oil price base of say $84, $85 if I take a 3 months pricing lag. So now against that 84, 85, I mean if there is a base oil correction, are you in a position to like improve your margins? Because when we see the numbers, both yours as well as your larger competitor, what we have noticed is that last 3-4 years have been like good in terms of volumes, but I think there's some sort of like catch up in terms of margins which could be there. I mean both for you as well as for your larger competitors. So is there a thought process that there could be some increase in the overall margin guidance and like benefit from this lower oil price cycle?
So it is a margin is a function of as you know, it's a function of many things, including the pricing in the market, the competitive activities, and of course the product mix, the segment mix. So we have been highlighting that as a part of our Unlock 2.0. We have been focusing on premiumization. We obviously see that there is a stability in the input cost, but there is a competitive intensity which is also going up. Considering all this, it's difficult to say that in the short term there can be a benefit of the lower crude sustained, but over a longer term trajectory, over next 1 to 2 years, obviously our endeavor is to increase our gross margins and increase our EBITDA margins to the higher trajectory. So on a medium to long term basis, we are very positive to do that. But on a short term, it's very difficult to comment whether the short term crude movements or base oil movements can really help us generate those kind of elevated levels.
Got it. Thank you so much. Yeah.
Thank you.
Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Nitin Tiwari from Phillip Capital. Please go ahead.
Good evening, sir, and best wishes for the festive season. Thanks for the opportunity. So my question was related to the A&P expense that you highlighted. So just wanted to understand that was this expense also present in the first quarter, or is it specific to this quarter? That was one. And secondly, when it comes to measuring the returns, I mean, then what are the metrics that we perhaps deploy to understand that what kind of returns the investment that we are doing in brand building and A&P is generating for us? And thirdly, sir, what would be a more normalized level of basically expenses that we should consider if we are looking at this grand campaign related expense as an aberration in our overall scheme of things? So that would be my first question.
So,
You start
yes.
and then I'll
So Nitin, we are, see, our ratio of our ANP to overall revenue we have been sharing is around 3%, 3 to 3.5% at times. And sometimes it goes higher in some quarter even. So these are all expenses which are planned on a campaign basis, on an annual basis, and then we have to obviously look at, as I mentioned, share of voice and other campaigns which we do. So it is basically around that level only which we plan. So it is not that we are, and of course we have to see the share of voice and what our objectives are. So it is around this range at present, and this quarter it was slightly more because we had a mega campaign. Of course we would like to continue investing in the brand. So the more we can invest, the more it helps us in the market, but it has to be a balanced approach. So I think that is what we basically keep calibrating.
So just to add, Nitin, we have already guided that our usually advertisement is in the range of 3 to 4%, as Ravi highlighted. In a normalized way, we would be in towards the lower end of this band, and in this quarter like this, we are on the higher side of this band. So that's where the delta is anywhere between 50 basis point to 75 basis point in given quarters. So that's where we usually play.
Sure, sir. The reason I asked is because, sir, in quarter one, we had the other expenses of about 209 crores roughly, and which is like at about 208 crores in this quarter. So it's actually lower. I suppose ANP expense finds it. Is a part of other expenses only, right? So,
Nitin,
so,
I will just interject. That is mainly because of the lower AdBlue volume. If the freight expenses are lower in this quarter, because there is an 8,000 KL nearly lower AdBlue volume, right? From last quarter, and that's where the freight has been lower. So you see that there is a lower freight, and there are other expenses which includes advertisement, which includes OEM royalties, these are slightly higher. So on the net basis, you see similar figure, but it's because of the interchange between these 2-3 things.
Understood, sir. All right. So I was just trying to understand the EBITDA margin in this perspective, because if I look at the gross margin, it is actually on the high side. The only difference, therefore, then lies in the employee expense, which has gone up on a sequential basis. So I suppose that you indicated about that you building team for future growth. I suppose that would be the explanation, right, sir?
Yes, absolutely right.
Yeah. And sir, second would be more on the bookkeeping side. If you can help us with a broad segmentation of the volumes in terms of various segments like motorcycle oils and basically the car, etc. and everything. What would be a percentage breakup?
So for the quarter, I think we are roughly 39% in terms of diesel engine oil, which is similar to quarter one. In terms of personal mobility, we are higher by around 2%. And in terms of industrial and others, we are lower by 2%. So more or less in that range. But as we mentioned, motorcycle has been very good in this quarter. So that is sort of 2% increase in the mix in terms of personal mobility.
So would it be right to consider that personal mobility at about say 22% and industrial at about 18%? Those would be the right numbers.
Yeah, that's right.
So that is, and rest would be about, I think, gear oils, brake fluids, etc., right? So which would be remaining 20%.
Correct.
Got it. Okay. Thank you, sir.
Thank you.
Thank you. The next question is from the line of S. Ramesh from Nirmal Bang Equities. Please go ahead.
Good evening and thank you very much. So if you look at your balance sheet, what is the reason for the increase in debt? Because there is a loan given during the period and the cash flow. So can you explain why you have had to increase the debt between March and September?
So I mentioned in my opening remarks, Mr. Ramesh, that we have had to store higher inventory because, as I was mentioning in one of the earlier questions, some of the refineries were going for where we have a term contract. They were going for a maintenance shutdown during October, November. So we had to pre-buy some of the inventories, and that's where you see increase in the borrowings.
So how do you see this debt being paired, say, in the next few quarters?
Yes, obviously.
Okay. So in terms of your overall volume growth of 9%, how does it compare with the overall growth in the Indian industry for your comparable segments?
Yeah, so we don't have data validated, but whatever we are gauging, the industry is growing by 3 to 4%, and I think that is where some people say 4 to 5 because of bazaar growth or different segments. But for us, the 3 to 4% growth is what the industry is getting in terms of volume, and I think we are continuing to look at a 2 to 3x of that. So that's the way the industry is growing. Of course, we have various segments which are for us also. It depends on how your position is, what your geographies are, and we also have B2C and B2B. So overall industry growth is 3 to 4%.
So if you look at your diesel and personal mobility, which is the lubricants for vehicles, can you put a number in terms of what will be your best guess on market share, and where do you see that going, say, in the next 2-3 years?
Yeah, so if you look at the segments, we are strong in diesel engine oil. We have close to 8-9% market share there. Similarly, motorcycle, we are 8 to 9%. So I think this is where we are, and most of the other segments we are 5 or below.
Okay. And will you be able to build on this market share and increase the market share?
Yeah, so that is what we keep stressing. You see, our brand is in the top 3, and we obviously have to convert more consumers to buy us. So that's where the whole piece on the approach in terms of marketing, distribution comes up. So we see good opportunity where we have these, I would say, moderate market shares, and where we are strong, obviously we want to grow 2x. And we continue doing that across B2C, B2B, as we have been doing in the segments that I've identified, and that is where we create our sort of differentiation to be able to gain market share ahead of market.
So just 2 more thoughts. So based on this kind of strength you have in the market, what is the kind of increase in ROC one can expect, say, over the next 2-3 years, based on the investments you're making in brands and the growth in the market and your own market share increase? Roughly, what is the kind of internal target you have to improve your ROC?
You see, ROC is again a function of many things. We have been keeping cash also on the balance sheet to look for opportunities in terms of investments into EV business and looking for more play in that segment. So overall, if we pay out, we have been currently paying out roughly 55-60% as dividend payouts, and that we have increased over the last 2-3 years from 35-40% to now 55-60%. So obviously, ROC is impacted partly because of keeping cash for the investment for future. If we see that there are opportunities which are not immediately forthcoming and we increase the payouts, then ROC obviously can improve. So there are many factors. Obviously, from EBITDA perspective and PAT perspective, we have been growing much ahead of the industry and overall more than double digit for the last 2-3 years, quite significantly. So that also is all positive factor, we would say.
So now coming to Tyrex, if you look at the notes to the accounts, number 6 in consolidated accounts, there seems to be a loss in the second quarter of around 1.5 crores. So when do you see the Tyrex breaking even? And if you take 2-3 years from now, what is the size you expect in terms of revenue and, say, EBITDA margin? Can you throw some numbers on that?
So, in the last call for the quarter, June, I think we explained this, that it's a very nascent business and small company at this stage in terms of top line, but we have been investing significantly in terms of their capability building for R&D, for manpower, creating Indian service network for chargers. So all these investments are being put into the company for future sustainability and growth. Obviously, as I mentioned in the previous question, that they have already delivered 25 crore top line this H1, which is more equal to last year full year. So we will be obviously aiming to double the top line at least every year for the next 3-4 years. And that's where we believe, and we have announced in the past also that we want to at least take this company to 500 to 700 crore top line in next 5 years. And then obviously at the EBITDA margin level, we believe that they should be EBITDA neutral to EBITDA positive marginally in the current year itself.
Okay. And any additional investments you need to make in the next 1 or 2 years?
So we have invested 65 crore in the company as a primary investment when we acquired this company. So that cash was with them to grow the business for their working capital needs and plant expansion. So we at this stage we do not see that there is a need to put more money for the growth of the business. And of course some working capital loans can be availed from the banks. But if we want to, and we have 51% and we have all the ROFR clauses, if we want to increase the investment or percentage of shareholding, then further investment will be needed, which at this stage we have not been thinking about.
That's very helpful. Thanks a lot and wish you all the best and the best of season greetings. Thank you very much, sir.
Thank you.
Thank you. The next question is from the line of Yash Nandwani from IIFL Securities Limited. Please go ahead. Mr. Yash, your line has been unmuted. Please go ahead with your question.
Hello, am I audible?
Yes, sir.
Yes, sir. Yeah, thanks for the opportunity. Sir, can you please confirm the realization per liter for AdBlue in the quarter and whether the margins still remain in low single digits?
So AdBlue realization for the quarter has been slightly lower than what we have been earlier indicating by 3-4 rupees. So as we see Q2, the realization was in the range of around 45 rupees.
Okay.
As against 50 rupees which we have been earlier talking about, because urea prices also came down. So obviously that is reflected in the price in terms of
Sorry to interrupt,
realization.
sir, but there is some disturbance in the management line. We have to reconnect the line.
Is it okay now?
No, sir. There is some disturbance. We have to reconnect the line.
Okay, please do.
Ladies and gentlemen, thank you for patiently holding. We have the management line back on call.
Yeah, please go ahead, Mr. Nandwani.
Yes, sir. So I just wanted to confirm the realization per liter for AdBlue and the margins for the same.
Yeah, so I think we have already responded to that, right? It has been around 45 rupees realization for Q2, which was earlier around 50 rupees. So, and the margin remains roughly similar, mid-single digit.
question was, could you throw some light on your dealer margins as a percentage of your sales price, and if you could give some details as compared to those of your competitors as well, please, sir?
I think, see, that is it's a relatively, in the lubricant industry, the margins vary based on the brand strength. So, they get a base margin and then they get certain other margins which they get for their various activations. So I think that is a brand positioning which we generally would like to, we have a quarterly annual scheme which we give them incentives. So that is the construct in terms of overall. And it also is relative to our brand strength. So I think that is something which we obviously don't publish publicly. It is a document between us and the trade.
Okay, thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Angad Kedari from Samiksha Capital. Please go ahead.
Thank you for the opportunity. I just have one small bookkeeping question. I joined a bit late. Could you please give me the volume and volume data for core lubricant and AdBlue in kiloliters, please? That would be helpful.
So the core lubricant was 37,000 KL and AdBlue was 29,000 KL for the quarter.
Thank you and all the best.
Thank you. Thank you.
Thank you. The next question is from the line of Prabal Singh from ICICI Securities. Please go ahead.
Yeah, thank you for giving me the opportunity again. I actually had a couple of slightly longer term questions. EV fluids as a segment, is it still too early to speak about it? Has it gained any sort of scale at this point of time, or is it still very early days for it to sort of be spoken about as a separate business?
So you see, EV fluid, obviously the fluids that are going in are transmission, brake fluids, grease, coolants. So as we have been explaining, we are present in some of the EVs. We have close to 9-10 EV OEM stroke component manufacturers. So it's going to be a very small volume, even if it comes for all the EVs that are going to be made, which are now going up. As you know, the penetration is going up from 3-4% to even 50% in three-wheelers. So I think it's going to be a growing segment. We want to be part of it because we are there, and we already have a good partnership with few OEMs. So, but not a very large volume. It will still be a very small volume of the overall pie.
So, sir, is it? I mean, in your view, in terms of how you have seen the segment evolve, by when do you see this actually developing into a material component of our business?
See, if you track the EV penetration, today, whatever numbers we have, as I told you, three-wheelers is 50%. All the others are low single-digit penetration of new vehicles. So by the time these vehicles come up, and two-wheelers is probably going to be at 6-7%. It can go up to double maybe next two. So once it is of a sizable side, we are anyway there with the OEMs, and we have the products in our range for EV. A few new products will come in like coolants, it's a slightly better thing. So as this evolves, we have a global range, so we'll be able to play in the share that whatever it is there in the market. And as you know, we are very strong with OEMs. We have a very, very large number of OEMs as you look at our, customer base. So I think it's going to be still single-digit volume, even if it goes to its maturity.
Understood, sir. And the other question was, you yourself just alluded to the OEM relationship, and you did speak about it in some detail in the year-end analyst presentation. Just wanted to sense that what has happened to OEM relationships in H1, how many more have we added, where are we right now, and also if you can speak a bit on how the B2B business has evolved, and where do you see that going forward for the next 6 to 12 months?
Yeah, so I'll start with B2B, Mr. Sen. B2B, see, we are present in the B2B segment with industrial customers. We have a distributor network, plus we have infrastructure customers, IMF. Both these segments for us, we have less than 5% market share. In some geographies, maybe higher, but overall. And this business has been growing double-digit volume for us. Obviously, we have certain strengths which we have in each of the segments. We have a product range. We are working on getting more OEM approvals in our distributors. Also, we have got appointed, and maybe few locations are left. So this business is growing well with India manufacturing base going up. The way Indian manufacturing industry is going up. You take sectors, whether you take textile, you take food, you take cement, you take metals. All of this is going up in India. So we are part of this growth. and we'll continue increasing our market share if we are growing double digits, because this industry is also growing maybe 4 to 5%. So you see, that's where our endeavor is on. And coming to the OEMs, we have very strong relations with OEMs, both automotive, industrial, construction, and of course now with EV fluids, we are there with them, and the EV, even some of the new EV OEMs we are getting. So we continue to growing there, and of course we get aftermarket is where 90% of our volume gets sold. So OEMs again give us products which we can sell in aftermarket, like the franchisee workshop. So in terms of any new OEMs added in this quarter, we are working on a few prospects. But we are also growing with our current OEMs. So that's a positive where we get extra territories. We cover more in terms of their spread. We are exporting for a few OEMs. So this, I think it's been a very good quarter, as I mentioned to you, that the channel OEM business has grown double digit for us with the current OEM. So no new announcements, but hopefully we'll get a few. We have more or less got representation in most of the sectors in the OEMs.
Right. So, sir, if I can sneak in one last question with respect to the Unstoppable campaign.
Yeah.
Typically, a campaign which is, as you mentioned, which is more ambitious than one thing that you have done. Will this also be accompanied by probably an aggressive push to grow our retail distribution platform as well?
Yeah. So this campaign, it is, if you have seen the advertisement, it talks about our 3 brand ambassadors. You know, they have, obviously there's a connect, emotional connect with the campaign. It's a rescue film, and then it talks about, we show the bike and the car, and then obviously we talk about the human aspect of being unstoppable, and then related to our products. So these are campaigns which send messages to consumers, and obviously we want more consumers to then get, you know, the current consumers are using us, they'll use more, and new customers. So it has got a lot of trade activations. Let me share with you that on the ground, once the campaign hit the media, and it still continues to go, we had display across thousands of our retailers done within 4 days of the campaign. So this is where the trade, and we have seen the confidence in the trade also going up, because when you invest in the brand, they definitely want to stock and sell more, and of course new outlets are joining us. So it is the objectives of these campaigns are also to get that what you just mentioned.
Understood, sir. Thank you very much. All the best.
Thank you, Mr.
Thank you. The next question is from the line of Rajit Agarwal from Atharva Investment Managers. Please go ahead.
Good afternoon, sir. Just a very small question. On the direct business, how do you see the margins in this business once this business has achieved a reasonable scale? Let's say 2 to 3 years down the line, will these be higher than our existing business, or will it be in the similar range?
See, as we see this business progressing, and this is a business which is more a B2B business. Of course, it has a component of retail, and it has a component of some elements of B2C, but a good part of this is a B2B business. But we believe that once we reach a size and a scale, it should deliver us at least the similar EBITDA margins as our lubricant business. So it will not be a margin dilutive business on a consolidated basis.
Right, sir. Thank you a lot. Just a follow-up, small follow-up. When you say it's B2B, so who are the end users of this service or product?
So these are Tyrex makes DC fast chargers, and they are the chargers with a capacity which is 30 kilowatt going up to 240 kilowatt and even higher. So these are basically, you know, chargers which are used to charge buses, for example, e-buses. So e-bus manufacturers and e-bus operators, they are the target customers. Of course, then we have fuel stations of, you know, private and public PSUs. They are also being, you know, guided to electrify their fuel stations. So they are a potential customers. Retail, wherever there is a, you know, construction and, you know, there are new malls being, you know, constructed, or even in the existing malls or shopping malls, housing societies, they also put fast chargers in, you know, and create some slots. So overall, you know, some of these are the target segments as of now. Of course, CPOs, which are the charge point operators, they are also a category who are electrifying highways and putting chargers across pan India to create a charging infra. So all these are the potential customers for this kind of fast charger.
Right. So these chargers are for passenger vehicles as well? Because you said it's high voltage, so is it for passenger vehicles and buses, etc., both, or is it only for buses?
Public chargers are mostly fast chargers, but cars, etc., can be charged with AC slow chargers also at home when they are there.
Right. Okay. Thank you, sir. Thanks.
Thank you.
Thank you. Ladies and gentlemen, you may press star and one to ask a question. The next question is from the line of Sarvanath, an individual investor. Please go ahead.
Hello. Can you hear me?
Yes.
Yeah. I just wanted to ask about the dividend payout being around 40% right now, and your future plans on whether you're going to sustain it or if you're going to change it.
So I think we have increased our dividend payouts to now nearly 55% plus in the last 2-3 years. So it's not 40% anymore. 40% was the payout 2-3 years ago, where we were maintaining around 35-40%. But as we continue to generate good cash, and our cash conversion to profits have been also very high at nearly 80-90%, and also considering that our capex requirement for lubricant business also is around 20-25 crore, 30 crores annually. So we continue to generate good cash, and we have increased the payout already to 55-60%.
Okay, got it. I apologize for the misnumber, but yeah, are you going to sustain that number in the years coming forward?
While we do not have an announced policy for the percentage, but obviously our trajectory has been to maintain, and if as I mentioned in one of the earlier questions, if the use of cash is not quite visible in the near future, it can be increased also.
Thank you so much.
Thank you.
Thank you. Ladies and gentlemen, you may press star and one to ask a question. A reminder to all the participants, you may press star and one to ask a question. The next question is from the line of Nisha Mulchandrani, an individual investor. Please go ahead.
Hello, am I audible?
Yes, please.
Yeah, so 2 questions from my side. Firstly, on the AdBlue, since you mentioned that there is a decrease in the volume because of the seasonal impact. So what are the spaces or the route to market for AdBlue? Is it only in the OEM segment, or how does this work?
Sorry, your voice is breaking, Nisha.
I'm checking on the AdBlue segment, since you mentioned there is a drop in the volume in the current month because of the seasonal impact. So what is the route to market for AdBlue? Is it only through the OEM segment, or it is distributed along all the spaces and channels?
No, it is right across all our touch points.
Okay, and the majority of it we assume must be because of the DO, which is the diesel engine oil in the OEM segment, right?
Yes.
Yeah. So this is AdBlue is used for diesel engine.
Okay. And one more thing around the export piece, I guess you have mentioned in the press release that the exports have really shown a good growth in this quarter. So what is the overall percentage of the exports on the total portfolio? Has that also gone up versus the earlier quarters?
So yeah, I think we are now at around 6-7% in terms of our export as a percentage, while earlier it used to be 3-4%, and then we stabilized around 5%. Now it has gone to 6-7%.
Okay. And on the last piece, sir, specifically on the new technology that is being developed around the data center. So any view on that point, that have you started anything or any product development for that range?
Yeah. So we have started. We have products. We are developing them globally.
Okay. Thank you, sir.
Thank you.
Thank you. Ladies and gentlemen, you may press star and one to ask a question. A reminder to all the participants, You may press star and one to ask a question. As there are no further questions from the participant, I now hand the conference over to the management for closing comments.
Thank you. I'd like to thank all of you for being on the call. We hopefully have answered your questions. Going forward, obviously, we have continued the trajectory of 2 to 3x industry volume growth. So our focus remains to do that, and of course, to look at revenue growth and be ahead in the industry. We are quite confident that we will continue our market-leading growth to gain market share, and of course, we will continue our focus on margin management, profitable and sustainable growth, better product mix, and marketing initiatives. As we have shared with some of you earlier, to achieve the next level of growth and success, we have embarked on the theme Unlock 2.0, which is accelerate, premiumize, and transform. For acceleration, we are not only growing ahead of the market, we are also focusing on growing more in areas where our market share is lower. And given what is happening in the Indian economy, the demographics, the growth of automotive industry, manufacturing industry, and of course, we believe that this will give us opportunities to grow faster and much better in terms of categories where we are strong and also where we have less market share, and also enhance our profitability. While we premiumize, we are looking at the value growth, which the industry is also seeing in terms of having a higher volume growth, value growth than volume growth. So we will continue to look at that, bring in products which can give us part of this growth. And also where India is the third largest lubricant consuming country, we are clear that this, in spite of EV, we are going to see 3%, 4% volume growth and double of that in terms of value growth. So over the next decade, premiumization in terms of products is important. We are focusing on that in both in terms of product development and placing the products. The third theme of transformation, we are looking at not only digital infrastructure, brand investments, digital social media, but also EV charging solutions, and really the core transformation and transformation across the organization, plus the EV ecosystem is what we are talking about. So we are quite confident of this. We are also, as we have mentioned on the EV, we have started making some inroads through our charging business. The recent PM e-Drive, which was announced in August and is now effective from October 1st, is again talking about giving a lot of incentives to increase the charging infrastructure. This helps us and the Tyrex business, and really this is again a good development that has happened. And of course, as Manish mentioned, we are going to look at more investments going forward. So overall, I think looking at continuing the growth, and certainly in terms of we also have other companies with Tyrex Electricity, which makes software, Indra AC chargers, which we plan to bring in India. So given our business relationships, our brand, and our touch points, we want to also capitalize on that. But the core lubricants and of course continuing our AdBlue growth is also a key focus area. That's all from my side. Thank you so much for joining us on this call, and look forward to you joining our next call. Thank you so much.
Thank you. On behalf of Emkay Global Financial Services, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.